Imagine waking up, and your bank account is worth less. Your job? On the chopping block? Your groceries? Double the price from last year. This isn't a movie. It's May 2025, and the United States is in the middle of a new kind of war. A tax war with China that's threatening to wreck our economy and your future. What's coming is bigger than inflation, bigger than supply chain delays. It's a financial storm, and it's heading straight for Main Street. And if you think it won't affect you, think again. Let me show you what's really happening and what's coming next. What's happening? The U.S. China Tax War. This didn't start overnight. Back in January, the U.S. slapped massive new tariffs, 40% on $300 billion worth of Chinese imports. China hit back hard, export bans, rare earths, medicines, food staples. What does that mean for you? Sky-high prices, shrinking availability, slowdowns everywhere. Tariffs are like taxes, but sneakier. You don't see them, but you feel them. Every time you buy eggs, fill your tank, or fill a prescription. Long-term fallout for Americans. Let's be real. How bad can this get? Inflation? Still over 6% and climbing. Mortgages? Frozen. Rates are high. Jobs? Layoffs just started. Logistics? Retail? Even healthcare. Dollar? Weakening. China's pushing oil deals without the dollar. Consumer power? Shrinking by the day. Even if you're not an economist, this is in your rent, your fridge, and your future. And the real danger? A slow-burn recession that turns into a rapid financial collapse. Just like 2008, but with a new global rival at the wheel. Now, let's take a look at the best 5 ways to survive the 2025 crash. Tip 1. Get liquid. Build emergency cash the smart way. What it means. In a financial crisis, cash means control. Having accessible money on hand can make the difference between staying afloat or going under. But saving when the cost of living is skyrocketing isn't easy. So, how do you get liquid without a bigger paycheck? Let's break it down. How to do it. Cancel invisible subscriptions. Go through your bank statements and spot subscriptions you haven't used in the last 30 days. Streaming services, gym memberships, cloud storage, and app trials can quietly drain your wallet. Cut anything non-essential. Switch to the envelope method. Each week, withdraw a set amount of cash for groceries, fuel, and other necessities. Using physical money makes you more mindful of your spending and helps limit impulse buys. Sell dormant assets. Look around your home for gadgets, tools, or equipment gathering dust. Selling unused tech or hobby gear now, while markets are favorable, can give your cash reserves a quick boost. Pause non-essentials. Temporarily stop paying for non-urgent services or prepayments. Redirect that money to build your cash buffer instead. Set a micro goal. Start with a manageable target. Save $1,000 as quickly as possible. This fund is your lifeline for urgent needs like food, fuel, or medical expenses. Tip 2. Diversify your income. Turn skills into safety nets. What it means. Relying on just one employer is like standing on a single leg. One misstep, and you're down. In today's unpredictable economy, it's crucial to create multiple streams of income. Think of it as financial shock absorption. If one source dries up, you have backups to soften the blow. How to do it? Freelance what you know. Got skills in writing, graphic design, or tutoring? Platforms like Upwork, Fiverr, and Contra are packed with opportunities. Even just a few projects a month can create a solid safety net. Service-based hustles. Babysitting, dog walking, car detailing, delivery services. You'd be surprised how much you can earn with just a few hours a week. These gigs are fast to start and require minimal upfront costs. Teach online. If you know Excel, photography, or even makeup tips, why not monetize that knowledge? Create micro-courses on platforms like Skillshare or Gumroad. Passive income can roll in long after the course is published. Deliver or drive. Apps like Uber, DoorDash, and Amazon Flex are straightforward ways to earn quick cash. Perfect for evenings or weekends, these side gigs are there when you need them. Auto-save side income. Use apps like Capital or Acorns to automatically save 20 to 30% of your side hustle earnings. Over time, this stash becomes your emergency fund. Tip 3. Invest defensively. Protect, don't gamble. What it means. Right now, the economy is too unpredictable for high-risk gambles. Forget the hype around the latest meme stocks or speculative crypto coins. Your focus should be on stability and protection. Investing defensively means prioritizing security over quick wins. How to do it? Invest in needs, not wants. Essentials like utilities, healthcare, and food will always be in demand, even during economic downturns. Companies in these sectors are typically more stable, providing reliable dividends and growth. Short-term bond ETFs and CDs. If you want your money to work for you without wild volatility, short-term bonds and certificates of deposit, CDs, are safe havens. They offer modest returns but are far less risky than stocks. Split your assets. Don't put all your money in one bank or investment platform. Spread it across multiple accounts to protect against institutional failures or unexpected freezes. Hedge against dollar risk. If the U.S. dollar weakens, having exposure to gold ETFs, precious metals, or foreign currencies can protect your portfolio's value. These assets tend to rise when the dollar falls. Tip 4. Eliminate toxic debt. Kill the high-interest drain. Debt is more than just a financial obligation. It's a chain that keeps you tied down. High-interest debt, like credit cards, can bleed your finances dry faster than you realize. Think of it this way. Every dollar you pay in interest is money you can't save or invest when times get tough. And if there's one thing you don't want during an economic downturn, it's high-interest debt hanging over your head. How to do it? List all debts by interest rate. Forget just focusing on the balance. The interest rate is what's bleeding you dry. List everything, from credit cards to personal loans, and prioritize by APR, annual percentage rate. Debt avalanche method. Pay the minimum on all debts except the one with the highest interest. Funnel every extra dollar into that one until it's gone, then move to the next. Call your lenders. Negotiate for lower rates, deferments, or hardship plans. You'd be surprised how flexible some lenders can be if you ask. Refinance smartly. Look into 0% balance transfer cards or personal loans with lower rates. Stop new debt cold. If you don't have the cash for it, don't buy it. Focus on freeing yourself, not digging deeper. Tip 5. Track economic signals. Don't get blindsided. Economic downturns rarely happen overnight. They send out warning signals that many people miss. If you can learn to read the signs, you can make smarter decisions long before things get worse. Being proactive, not reactive, is the difference between riding out a storm and getting swept away by it. How to do it? Watch the Fed closely. The Federal Reserve's decisions on interest rates and monetary policies can shift markets dramatically. Follow their announcements, especially during FOMC meetings. Check inflation metrics. Keep an eye on the Consumer Price Index, CPI, and the Personal Consumption Expenditures, PCE, index. These indicators reflect the real cost of living changes. Monitor the yield curve. If short-term bonds start paying more than long-term ones, it's a classic recession indicator. This inverted yield curve has historically signaled downturns. Use apps like Finimize or Investing.com. These platforms break down complex financial news into 5-minute summaries, perfect for non-experts. Follow independent voices. Mainstream financial news often reflects market optimism. Instead, seek out independent economists, YouTube analysts, and newsletters that provide raw, unfiltered insights. You didn't choose this tax war, but you're living in it. Governments argue, corporations adapt, but you have to survive. Don't wait for the crash to hit before you act. Start now, save now, side hustle now, watch the signs now. Be the one who doesn't panic because you prepared. Like this video, share it, comment on how you're getting ready, and subscribe. We bring truth the news won't.